Great. Okay. Hello, everyone. My name is Janice, and I am the director of the Low Income Taxpayer Clinic at Maryland Volunteer Lawyer Service. And I want to thank everyone for joining today. We have a really great topic today, and Tina is telling me some of this stuff is new and cutting edge, so you will hear it here first. So thank you so much for joining us today. So we're going to go over some sort of general logistical stuff first. If you have any questions along the way, feel free to go ahead and put them in the Q&A box, and we'll try and answer them as we go along. Certainly feel free to share any comments or questions that you might have. If you are not already an MVLS volunteer, we do encourage you to sign up. Even though our name is Volunteer Lawyers, you do not have to be a lawyer to sign up in the tax clinic, because we do know that the IRS and state recognize both CPAs and enrolled agents as tax representatives. So definitely please join us for that. Let's see, our next slide, please. All right, this is a copy of our pro bono portal. As you can see, all of our cases at MVLS are grouped according to category. The little blue box is tax. It is the smallest box there, but certainly the most important box. If you were on the portal and clicked on that, you would see our available cases. And we always do have available cases, people who definitely need help. So this is a great way for you to take the knowledge that you are receiving through our webinars and trainings here and apply them to a real life situation. So next slide, please. Great. As a member of our volunteer panel, you do have access to all of our pre-recorded trainings, not only in tax law, but on a variety of other topics as well. So we do, again, this is one of the benefits of being a volunteer. Next slide, please. Great. So we do invite you to join us and follow us on social media. We have a couple of different things going on here. It's always helpful to see what's going on in terms of our trainings and clinics and other ways that you can volunteer and get involved. Next slide, please. Okay, so again, if you're not yet a MVLS volunteer, please join us. And very good. Thank you, Tina. And I think that's it for me. I'm going to turn it over to Tina now, who will introduce herself and tell you a little bit about her journey.
Sure. So yeah, my name's Tina Azarvand. I'm currently an attorney here at Frost Law. I actually got my introduction to tax law through Janice. I was her intern in law school after my first year of law school. So I credit my love for this field to Janice, and you guys should all volunteer if you're not already volunteer lawyers with her or non-lawyers. You know, it's really good, fulfilling work to work with MVLS. So I strongly recommend it. Just to kind of dive into what I'm doing with this presentation is I just wanted to kind of raise the state income tax credits that I feel like are oftentimes being ignored. You know, I've noticed with other practitioners and even myself that I'm constantly learning about new credits all the time, even though it's something I actively, you know, try to take advantage of for myself and my clients. So just to kind of start it off right now, you know, student debt is a really hot topic, and you know, most of us, if we've been through law school, we have it. A lot of people don't know that the Maryland Higher Education Commission actually has a credit that they will give you money to pay towards your student loans. You know, it's definitely under-advertised, underutilized. I've actually utilized it myself already, and I recommend anyone else on this webinar, even if you don't have loans, definitely take note of it for people you know. You definitely know someone who has them. Basically what it is it's a refundable credit that you do have to apply for in advance of actually preparing your tax returns or anything. So the application period does close September 15th. It's not actually open yet for this year, but it's opening July 1st. So if you guys want to take note of that, you can apply online through Maryland's One Stop, like a lot of the other credits. There are some rules with this on how they do prioritize it. Even if you did go to school out of state, you can still get this credit, which is a huge misconception with it, where people think, oh, it's a Maryland credit, so I have to have gone to Maryland school. It's true, you'll get a lower priority, but they generally give this credit to everyone who's eligible, you know? So it's definitely worth looking into regardless of where you went to school.
And Tina, a quick question for you. When you say priority, what do you mean by that?
Sure. So basically, they're going to look at these list of factors that I have on the screen, and they're going to say, okay, this person should get the credit over another person, or, you know, like they'll reduce it. If you're eligible, I did misspeak. If you're eligible, you will get a credit, but you might get a larger credit if all of these things apply. Like if you have a higher debt to income ratio, one thing that's really notable about this credit is that there's not an income cap. You know, typically if you're taking the lifetime learning credit, for example, with the federal government, it'll phase out after a while. With this, they just look at your income to debt ratio. So that's something that's a little more special about this. Does that
Okay,
help?
so it's not like there's a limited number of credits.
No. So they basically have a pool of money, and if they have a ton of people apply, you'll just generally get like a smaller credit, but everyone gets it if you are eligible. You know, you'll just, I can't speak for exactly how they quantify it, but you'll likely get a smaller credit if you went out of state and, you know, have more money versus someone who's very tight on their budget. You know, they take all of those factors into account.
So with the credits, then if you say you were in school for several years and you took this credit year after year, would the amount change even though your situation might be the same? Or
the amount can vary year to year. People do apply. That's something I actually worked with the Maryland Higher Education Commission, so I'm very familiar with this credit. But it does really depend on how many people apply, is like kind of where they get the ultimate say in how much funding you're going to get.
okay, great, thanks.
Yeah. Did that answer your question?
Yes, no, thank you. Thank you. That's wasn't sure if it was like a when you were saying priority, I didn't know if it was like a set amount, kind of like the you know, like the PPP loans that came out during the pandemic, where only certain, you know, like the first applicants were the ones to get it. But it sounds like this is available to all students then.
Yeah, correct. So even like I said, if you went out of state and stuff, or even if you are making good money, you're still eligible. You're just probably going to get less. But they did explain it as, you know, the more people that apply, it's likely you'll get less of a credit because there's a certain amount of funding that goes into this program every year, but you'll still get a credit regardless.
So, but you do have to apply for it when you file your tax return, or
so you have to apply in advance of.
In advance,
so the period, yeah, it's actually only July 1st until September 15th. So you only have 2.5 months to apply for this credit.
Oh.
And then they'll send you a notice via email saying, hey, you've been approved for this credit. The amount's going to be this amount. And then you have to attach that certification to your tax return. And I'll go into my next slide because this kind of covers all of that. But basically, you'll claim it on your Maryland tax return, but you'll have to do like a Form 502 CR, which is to claim other credits. So that's where it'll show up, but you have to put that certification on there or it will not work, you know? And then another rule with the program is that this is actually from my own letter. So that's why with the dates, I received this in 2020. So it gave me until April 15th, 2023. And if I didn't pay those funds to my student loan provider by that date, I would have to repay the whole thing. So that's like a rule of the program also to be very aware of, you know. And that's kind of the whole Maryland student loan debt relief credit. Just in an overall picture, I would really recommend you guys look into it because it's just extra money towards your loans, you know. And just moving on to our next point is more focused on homeowners. You know, so I decided there are so many different homeowner credits in Maryland across the counties. I just decided to focus on the main 2 state programs and then focus on senior property tax credits and veteran tax credits since they're generally available in all counties. So moving first to the homestead credit, this one, there's no income limitation on it either. And in this real estate market, it's very important to be aware of this credit because what it does is it caps the increase that will be on like your assessment. So basically, depending on the county, and I'm sorry I didn't include all of them, it's a very long list, but in Maryland, they can't increase your property taxes in a year by more than 10%, whereas in Highland Beach, they can't by more than 2%. So this program where real estate prices are skyrocketing, of course, the assessments from ESTAT are eventually going to go up as well. And when that happens, everyone's property taxes are going up, you know? So this program basically protects you from paying in excess of those amounts. You know, a lot of people, again, they don't know about it because, again, this is something you have to go apply for separately. You can't just do it on your tax return. So there are also other conditions. You know, you can't have sold your house recently. It needs to be your principal residence. You can't have a substantial change in use of the property. It can't have been like, oh, I just rented it out and moved back in, or some other change like that. And also you can't change the zoning classifications and increase the value of the property. So definitely some conditions to this program, but generally for people, you know, if you think, okay, I'm going to be living in this house for several years, then you should definitely get that program, or even just a couple years. You should homestead your property because you're going to save a lot on taxes. And a lot of people are not doing that just because they're not aware, or again, they missed the deadline. So just another separate state program. So this is completely unrelated to the homestead credit. This is actually, this one's more income restricted. You know, it basically caps how much you can pay in property taxes. So, you know, if you're making up to like $60,000 a year, that's a sweet spot of where the program really cuts off. But this will save you a lot of money as well if you are of more limited means, just because it's preventing you from having to pay those additional taxes. So these are definitely underutilized, and I feel like are not brought up with low-income homeowners enough, especially that program. Like I did mention, the homestead credit, there is no income limitation. So even if your client lives in $1 million house, make sure they know it. I've had clients who don't even know what homesteading means. They didn't do it with their program or their property. So it's always worth bringing up. And then moving on to the senior property tax credits, which is really what motivated me to pick this whole subject to begin with, because I had a client where she's elderly and she does live in a pretty nice home, you know, and she didn't realize that when she went out and got a new mortgage, that mortgage was not paying her property taxes. So she did not pay them for 2 years. And then they said, hey, we found out our property is going to tax sale. One of our relatives told us. We didn't even receive a notice, but there wasn't a lot we could do in that point because they didn't have the funds to pay it. So we had to start thinking outside of the box of how they could get money to pay as much of the property taxes as possible, because obviously we didn't want it to hit that 6-month mark with a tax sale. So I actually reached out, and this was in St. Mary's County. I'll just skip forward just because I want to give a shout out to that county. They have great tax credit programs and they're very responsive, very helpful. But basically they have several different tax credits, and they taught me how you can go back retroactively, claim it for, we were going back all the way to 2018, claiming these credits for my client and offsetting them to the current years that are owed for, you know, they pulled out all the strings to help my client. And there are all these programs that I didn't even know about it. Other attorneys didn't know about it, you know, and just because they don't seem that relevant until they are relevant, but they're out there and they can help a lot of people and make a lot of difference. So, you know, for example, right now, Prince George's County, actually, this week, I believe they're supposed to hold a public hearing on whether or not they're going to have their own elder tax credit. You know, some counties don't even have one. So I did want to point that out, where there are some opportunities here to kind of speak up, especially if you live in Prince George's County, and go help the elderly out there by saying, yes, they should get this credit. You know, the credits are ever evolving, is what people don't realize. Every year, or even more frequently than that, there are all these new credits coming out in all these different counties. And, you know, we unfortunately don't have a database. You can't go to the comptroller's website and say, okay, here are all the credits. Let me go through this. It's not like the state credits. They don't have a county by county. And people are definitely missing money because of that. So going back to this, though, another thing I do want to point out is it's a very county by county specific credit. You know, it's not going to be the same in each. If you go to Baltimore City, you need to be 62, but you have very tight income restrictions. Whereas if you're in Howard County, you need to be 65, but you just can't have a net worth of more than $500,000 with the household. Like, the rules are very different. And most counties do have at least senior tax credits. So they're certainly worth looking into for your clients, especially considering a lot of these don't even have income restrictions. I'm not going to list all 23 counties, but there are many others like Howard County as well. So that's definitely worthwhile and everything to bring up with your elderly clients. And then just going to my last homeowners credits, that area of credits that I wanted to focus on was for veterans. Because although they do have the VA, these are also, again, a lot of them are county specific programs. The one I have on my screen is not. I actually was not aware of this, to be honest, when I was doing this research. I didn't know that if you were considered 100% disabled, you can just be completely exempt from property taxes. So that's thousands of dollars a year saved for these families. And even if you lost your spouse in service and you haven't been remarried, you can still get that exemption. So there's so many benefits to that. So a couple others, Anne Arundel, actually in January 2021, they passed their own property tax credit for veterans, also based on disability. So that can knock a lot off their tax bill, especially here in Anne Arundel where things are pretty expensive. Another one I thought was interesting was Baltimore City. They have a fallen hero credit. So if your spouse died in the line of duty, you can basically get a credit for that as well. So there are so many different programs out there, and these are just a couple that I wanted to touch base on. There are so many different ones. I couldn't get into all of them. But the moral of the story is definitely, one, we need a statewide database with all of this information for everyone to use. But two, it's definitely like, sit down and look at the clients that you think could have these programs and make sure they're getting them, because, getting $1,000 or $2,000 a year towards your loans and a few thousand off your property taxes a year, that adds up. That can make a world of difference for someone. So these programs are all out there. They're just not well advertised, not well utilized, and it's kind of why we're all here. One last program that I thought is interesting that I wanted to bring up. It's a little more restrictive, but there is a renter's tax credit in Maryland. So even if you don't own a home, it's kind of mirrored after the homeowner's tax credit. But, I have the limitations down there. But it's up to $1,000 a year. It just comes through directly as a check and you get it. You can spend it towards expenses. There are some requisites on here. You'll have to submit proof of that you have a lease and all of these things. Your net worth is less than $200,000 for your household, all these different requirements that I have up here. So there are some rules that go into that, but definitely a lot of people are eligible for this program and, again, don't know about it. It's not very difficult. The application period for this one is a lot longer. You can actually apply for 8 months. It's not just the 10 weeks like the student debt relief one. You can also apply online like all the other programs. But that's basically it. Those are just the programs that I wanted to cover today. I guess I will open it up for questions, and yeah.
Great. No, thank you for this overview. So these are all specific to Maryland, and they're not related at all to federal credits. So
Right.
these are all very specific to Maryland. And I think it's really interesting then for the renters, because typically we don't think of renters as getting any sort of benefits at all. So could you go back to that slide and
Absolutely.
discuss that just a little bit more then? Because I think that, this is something that we never really think about. So with the renters then, so that there is a limitation in terms of the assets. It must be their principal residence. So the total assets, when you talk about total assets not exceeding the 200,000, you're talking about, so the individual is renting, so their housing is not included in that assets.
Their own personal assets. So let's say, their car, their bank accounts, if they did own another property, anything of theirs personally, but it's not about like the house they're renting, because
Okay. But they also then have to, so if they are, let's say, maybe eligible if over 60, so if they're under 60, then that's less of a.
They have just different requirements, and I can kind of go over here. Let's see.
I guess I'm thinking of like, say, a younger person who might be renting, who maybe, maybe someone who's just entering the workforce. And I'm thinking of like in Baltimore City, there's lots of new apartments going up. And so, they are typically expensive apartments, but they haven't, but the individual hasn't purchased a house or built up an
Yeah.
perhaps a large array of assets other than maybe their car. So, but they are generally under 60. So, so is this a renter's insurance or this renter's credit then just exclusively to an older population or?
No. So it's kind of like with the EIC or earned income tax credit with the you need to have dependents, and then there's the income threshold. You know, it's very similarly structured to that. Can you see my screen? Just making sure.
Yes.
Sure.
Yes. So
Awesome.
this is under 60 years of age. Okay.
So they have a little chart I should have included, but they also have, I'll scroll up for the elderly. They have a different chart as well.
Okay. So you have, so you're under 60. But you also have to have at least one dependent under age 18 living with you.
Sure. Yes, you do.
Okay. So really, so if you're like a single individual under 60, then you're not eligible for this.
Correct. Yeah.
Okay. But you have to have you could be a single, well, you would be like more like a head of household kind of person because you would have one dependent then.
Yes.
Okay. So really this is not, so for all of you, people entering the workforce and under 60 and without assets, coming out of college, getting your first job, this is not, you're not eligible for that unless you have a dependent. Right. Okay.
So, and then this is it's a lot less strict for the elderly. So this is where more people are eligible, you know? So your total income, let's say you can't spend, or if you're spending more than 2,000 a month while you're making 73 grand a year, then you'd be eligible for this.
Okay. Now, if you're over 60, do you also have to have a dependent or no?
No.
You can be a single individual.
Correct.
Oh, okay.
So
Okay.
different roles. It's a very nuanced.
Yeah, this is really confusing.
Yeah. I actually learned about it from the cash campaign. They're the ones who showed me this.
Okay. Yeah. So really, it sounds like with these credits and because there are there's such a wide variety of who can take advantage of these. It's really perhaps really very important for the tax return preparer who is or the tax representative who is counseling their client to really take a look at all of these things and find out where their client fits and whether or not they would be eligible for these things. But like you said, these are not even eligible. So it's not something that you can really wait till like April to figure out because the application process is so much earlier.
Yeah, that's correct.
Oh, okay. Okay. So this is something perhaps people should be having conversations with their clients all year round. And in preparation for tax season rather than waiting. Okay.
So we're actually in the application period for this right now until October 1st.
Okay. So yeah,
that is the hard part about these state credits and where most people miss them is because they, you know, if you don't see it on your return, you're not going to look for it. But if you go outside to these outside resources, they have all these credits. It's just you got to apply for them separately, but it's free money.
Yeah. So could you, if you missed that credit, could you go back to like an amend your return? Well, if you've missed the credit, you've missed it, right? You can't go back and reapply for.
Yeah, it's not as easy as amending the return. You got to get approved for the credit that year.
And okay, so it's really very specific to that year. Okay.
Yeah, because it basically this one, it comes through as a check directly from the state of Maryland. It's not combined as a refund. It's a weird separate tax credit.
Okay. So there is a question here for the 16 over, can they go back to 2018 as well? So I'm not sure I understand the question if we're not able to go back.
So it depends on the program. This one, you cannot go back on. The elder tax credit, I will say I was speaking of St. Mary's County specifically. They allowed me to go back to 2018 because that's as far back as you could. And, you know, but so that is a county by county, but for this renters program, there is through the state a period from February 1st to October 1st that you have to apply for it. And you can do that online or via mail or fax.
Okay. Sorry, I will turn myself on so that we can, it's not just a voice from the dark. So, okay, so some of the credits, the county credits, you can actually go back. There's, but some of these other credits, then it's year by year. So
Correct.
if you've missed that year application period, then it would be difficult to go back and reapply for it because you basically can't.
Yeah.
So you've missed it, except for certain counties where you might be able to go back.
Mhm.
Wow, this is really confusing.
There's a lot of them out there, at first I was like, I can cover them all. And then it's like, wow, with all these different counties, like some counties have multiple credits for the same thing and we're very similar, it's like how St. Mary's has 3 elder tax credits, I was like, it's just, there's a lot of them out there.
Yeah. All right. So there's 2 questions that kind of are similar. One is there a link on how to apply for the renter's credit? Like where is this information that you are? It's the DAT, Department of Assessments and Taxation.
So I can link this. Where did it go? So basically, I'll put this in the chat, but you can do it online or just send in a form. I would recommend doing it online. I've had a great experience doing it online.
And this is the renter's credit.
Correct.
Okay. And that is statewide.
Sorry, oops. The renter's credit is statewide. Yes. Sorry, I'm a rookie with this Q&A session. I said I answered it, but did not.
Right. Okay.
Here we go.
And then the second question, I guess, is there a list of these credits? It sounds like there's not. I think you mentioned, Tina, that there's not like one place that you can go to.
23 different. Yep. Or I guess 24 with the state, really, because probably even more. But yeah, you got to go county by county. So I went on all the different websites there. I did realize there is no database for this. We could absolutely use one.
Yeah. Yeah, that is very confusing. Okay. So I guess that if you're a practitioner, as you meet each client, perhaps most of your clients are in a certain geographical location. And so therefore, then you might not have to look at all 23 counties, but
Correct.
looking at individual counties.
Absolutely.
That would be helpful then. Okay. All right. Then. Wow. All right. So now we have a question going back to the education credit. This is about to clarify on the list of qualifications for the college debt thing. There was quote graduated from Institute in Maryland. Does that mean that if you have graduated, you can still qualify for when you attended during that tax year, or does it mean you don't get to apply unless you graduate?
You can still apply even if you haven't graduated. I applied while I was still in law school.
Oh, okay. So
I was ready.
All right. And it mentions if you didn't get a tax credit last year, does that mean you can only apply on alternate years? No, this is.
No, but they did say, and this is more internal, I was on their student commission. They did say it's typically a lot of people do it every other year, but there's nothing that precludes you from doing it. But you will get priority. Like you're going to get more and everything if you've never gotten it. The first time you get it will always, I believe, be the biggest. So, but you can get it unlimited amounts of times.
And so maybe you can go back maybe to, so I'm wondering, is there a limitation on time? So you graduated from an institution of higher education located in Maryland, or have a higher debt burden to income ratio. I guess my question is how long can you apply for this credit?
Indefinitely from the way it's written, but you have 10 weeks every year. So it's from July 1st to October 15th July 1st to September 15th. You literally only have 10 weeks to apply for this.
Okay. But when you say indefinitely, does that mean that, so like with the lifetime learning credit on the federal return or the American Education Act credit, so you actually have to have been in school within that tax year, right?
This is not like that. It is unlimited, like the lifetime learning. It's not, there's no cap like with the American Opportunity Credit. So you can get it every year and there's no like, oh, you had to have graduated within X amount. I read through everything and it's pretty expansive, Like it's people don't realize, and everyone I told about it who did apply for it did get it. So
Okay. So when you say there's no limitation to it, so since you don't have to have been in school in that year,
correct.
so like, can you apply for it once you've graduated, but you're still paying for student debt?
Yeah. So for example, for me, I'm going to continue applying for this every single year.
No matter how far back you graduated.
Correct. Yeah. Till my loans are gone.
So like you could have graduated 10 years ago and you can still apply.
You'll get it. Yeah.
Okay.
So you can get it if you're in school, out of school. There's no restriction on that. It's just, do you have debt? That's really the biggest thing. And it's a priority if you go in Maryland or you have less income, but either way, if you're qualified, you're qualified, like I said.
So then anybody who has student debt from whenever should be applying for this one.
Yeah, exactly. Like I didn't attend undergrad in Utah. I didn't actually have any other debt or anything from that. But when I came out here, I was barely a resident and I was able to apply for it and they gave it to me, So it's very, very good, especially, the people on this call, I think can all get it if they have loans.
Okay, regardless of when you graduated. So.
Correct.
Oh, that's
a good hidden secret.
And what is the value of the credit? Like, is there sort of an average amount of the credit?
I know it's 24 or 2,500. I can't remember off the top of my head. You typically won't get the full amount. Full disclosure, I got $1,200 the first time I applied, but
okay, but still. And so the idea of the credit though is that you're getting this credit and then you're to turn it around and apply it towards a student loan payment. Correct. Or towards that. So it reduces your debt by $1,200, which doesn't sound like necessarily a lot in the big scheme of things, but it's it's chipping away.
Yeah.
Right. And if you do that every year for like 20 years,
pay the interest. Just kidding.
Right. Well, it's something. It's something, certainly because that debt never seems to go away. I have. Yeah, it's like when you sign up for those student loans, it's like taking out a mortgage, right? Like 30 years.
Worse. Yeah.
Okay. Lots of good questions here. Let's see. Okay. So here is a question. If I had a $100,000 debt I have, $100,000 in debt, graduated in 2021, I could still be applying in 2025 or 2030 until I no longer had 5,000 due. So I guess maybe the question is that there's, like you said, there's no real endpoint.
Yeah, that's the great thing about this program.
Wow.
So really that is correct. I graduated in 2020 and I'm going to still be applying for the credit. I'm very similar facts. So yes.
Okay. And then I guess there's a question here to confirm, to qualify, do you have to incur a certain amount in tuition? Is there a
20,000?
Okay, so you have to have at least $20,000. You have to at least be $20,000 in debt.
Well, you've had to have incurred that much. So, but you still owe at least 5,000. So it's like, oh, I used to owe 20, I owe $5,000 more. You can still get the credit. So.
Okay. Wow. All right. So, and then someone says that they did have a taxpayer who graduated from school outside of Maryland who did receive this credit, but she was a Maryland resident. So I think in your slide, Tina, it was the priorities.
Yeah.
If you graduated from the school inside Maryland, you got priority, but.
There's the or also on this. So have higher debt burden to income ratios, because they're going to ask for a copy of your previous year tax return. Like this is substantiated, they make sure you're entitled to the credit. So.
Right. So when you say higher debt burden to income, your debt is higher than your income. Is that?
Well, for me, I graduated from an in-state, or I attended an in-state.
Oh, okay. You have one of these. So. You don't have to have all four prongs.
Yeah. So that's an either or. So it's like, if you go out of state, if you have a high debt to income ratio, they don't care you went out of state. It's basically what they're saying. They're like, oh, we'll still help you because you owe a lot of money.
Okay. Okay. And then when you look at this higher debt burden to income ratio, what if you are married? Do they look at your own single income, or are they looking at it as your income as a married couple, because I think sometimes paying back your student loans when they take into account your married income versus your single income, then you may end up having a higher payment, a student loan payment.
It's the same. That's a really good question. It's the same. They're going to account for spouses.
Okay.
So
So,
link the credit in the chat as well, so people can apply for that.
okay. So I'm sorry, are you putting the link in the chat?
Yeah, for the
Okay.
Maryland credit.
Okay, great. Lots of good questions here. I'm just taking a look and making sure that we're not missing any. Okay, so you do have to incur at least 20 or have at least 20,000. Do you have to have graduated before applying for this credit?
No.
No, so you can actually apply for it while you're in school, but you have to have that minimum amount of loan or the 20,000, like you said,
Correct.
which is very easy these days, I'm sure, for a single semester.
Yeah, absolutely.
Oh, yeah.
And I just added in the chat the link to the online application to the student tax credit.
Okay. I don't see it in my chat. I'm wondering if
I responded to Robiette.
okay, maybe could you put it in perhaps a chat for that's addressed to everyone?
Yeah. Oh,
Maybe that
sorry.
one.
I didn't realize.
There we go. Oh,
I thought
that one looks like it's to hosts and panel. There's so many options here.
Oh my gosh.
The one under it would be to
I'm a
everyone.
Google Meets person.
There we go. There we go. Yeah. Okay. So that's the student one. And I think that you also had put the other one in.
So
Previously?
I thought everyone could see in the Q&As. Bear with me,
Yes.
guys.
Oh, it may have been.
There we
There's
go.
so many different places to put information here on the webinar. Okay, great. So I see the onestop.maryland.gov. That's the student loan debt relief.
Yep.
And then there's the one stop renters. Oh, okay. So both of
They're
those
all on one stop. It makes it very,
one
and it's
stop.
really a user-friendly way to apply, I will say. I was impressed.
Okay. And so that's the renters and then the
And I'll
student
do
loan. But then there are the other
Maryland.
specific counties which
So,
have this as well.
yeah. And my recommendation for that, because unfortunately we don't have any sort of database, is just to look it up county by county. Because they all counties do have either a senior tax program or the veterans tax, either or, they all have one of them, and the other ones, the homestead credit and then the homeowners property tax credit, those are statewide. I'm going to put those in the chat as well. So we'll have those, but yeah, the county by county with being 23 counties, it's just, I'm going to keep saying database until there is one.
Okay. Very good. So we do have a question about how to get the slides. If you are a volunteer, one of the benefits of being a volunteer is that you do get access to this recorded webinar so that you can watch it over and over again, but also you do get access to the slides. So if you are not yet a volunteer, we certainly encourage you to become one. The way to sign up is I will send out the link for everyone, but there is, again, if you are a not only an attorney, but a CPA as well as an enrolled agent, we do invite you to join our volunteer panel and one of the benefits of being a member of our volunteer panel is that you do have access to all this great information, and also you have access to mentors like Tina who can help answer questions and help guide you, not only with MVLS clients, but also with your own private clients. We have had many people join and have questions about their own private clients that I don't always have a good answer for because it's not a population that I am that familiar with. So we will invite our other volunteers and our experienced volunteers like Tina and others who may have had some experience working in those areas who can help you navigate that. So again, lots of different benefits of becoming a volunteer, not only the good feeling that you will get from helping a client, but also then having access to information like this, which can be very useful for yourself. I'm thinking about these as well for myself, and student loans. I still have student loans that I'm still paying for many, many, many years later. And so, having a little bit of extra could be very helpful. So I think I'll have to divorce my husband first though, so I have a single income. But definitely good information to have here. So wonderful. Well, please, anyone else with questions, please go ahead and put them in the chat here or the Q&A so that we can address them. So Tina, do you like counsel your clients when you meet them about these things, or how do you use your client? It's not necessarily a topic of conversation that the client doesn't come to you seeking the credits, I'm sure. So is this something that you might bring up with a client, maybe on a first meeting, or something when you're kind of looking, maybe I guess when a client comes to you, typically they come to you because they have a specific issue they want to resolve, but then do you do kind of like a tax overview, like a tax health overview with them?
Yeah, so kind of depending on the client, first I do always try to get financials, because that's like within the first week, I'm like, let's get these forms and all of that. Once I figure out, okay, do they rent or own this place? Do they have student loans? That's when I start to bring it up. I'll see, okay, are they self-employed? They're going to need guidance on estimated tax payments, for example. So I'll pick out like their vulnerabilities instead of being like, hey, here's like a whole thing. Like, I like to get those financials, see where they could use the help, and then just let them know from that. Because generally I'll just send an email being like, hey, just so you know, there's this, and these are some other things I noticed about it. Make sure you're taking advantage. And so that's typically how I do it, is I wait to get the information from them. And then I figure out what programs they could use, and I let them know about it. I except with elderly, I always say now, like, hey, the tax credits, they're really, really good. It blew my mind how good St. Mary's is with their credits. So it's good, worth bringing those up for sure. But with like the MHEC and the ones that it might not be relevant, I just wait, because we usually have financials within a couple weeks, few weeks. So yeah.
And so when you say elderly, you're talking about 60 is the cutoff there for most of these elderly credits then?
Yeah, I look, because always, we know their birthday when they come in, so we'll have that information. And if I see they're of age, I'm like, hey, have you been claiming this now? I always bring it up. So I just check their age first now and make sure, just because, I had my one client, and she's been a client of the firm for years, and she just happened to like not understand like the new mortgage and all of that, but she didn't know about it, and I never brought it up with her. And I'm glad I did after I talked to the treasurer, because, it changed everything for her, hopefully.
Yeah, definitely. So, okay, there is a question about, did you say you work for Charles Schwab? You actually work at Frost Law,
Yeah.
Which is the name up here in the top right-hand corner. Tina, do you have a slide with your contact information?
I don't, but I can pull it up. I didn't think to put my own information. I'll pull up myself on the website. Maybe it should be on there, I think.
I think that there are many people who will want to get in contact with you based on the questions that we're seeing here.
Sure. So I just sent my website bio. So if you click on there in the middle, there's a way to email me, and then it has like my LinkedIn. But yeah, and then yeah, I work at Frost Law. We're based in Annapolis. Fortunately, I'm the only Tina, so I'm pretty easy to find. So.
Great. And so Frost Law is based in Annapolis, but they do have offices or satellite offices located in many different places, including down in the DC area. Do you have one in DC or?
So we've got an office, I think, of about like 20 now in like Rockville, and we've got an office in Ocean City. Those are our main offices outside of Annapolis, but there are like the satellite, I know Pikesville and some other places around Maryland, and then DC, Florida, Fort Lauderdale area. We've
right,
kind of all spread out.
The Florida one always.
Yeah.
Yes. So they're all over the place. They're a very large firm. And they do, there's a lot of focus on tax controversy, but also on many other areas of tax as well. And your area specifically, Tina, that you focus on, is it mostly controversy or?
It's mostly tax controversy. I do a lot of sales tax audit work as well. And right now I'm doing a lot of employee retention credit work, but that's kind of my main wheelhouse right now.
So, yes. So, well, since we have you on here and you're doing that employee retention credit, why don't you tell us a little bit about that just briefly? And that's really geared more towards employers, right, as opposed to individuals, which these credits that you discussed are geared towards more individuals. But
Yeah. So the ERC is actually, it's the craziest government program ever. Like, PPP used to be the big one, but what ERC is really, it's a refund of wages paid during the pandemic. So under the CARES Act, they passed PPP, they passed ERC. When they passed ERC, it was worth up to $5,000 an employee, but you couldn't get PPP. So like no one wanted ERC, no one got it. And as the pandemic went on, they went back, they said, okay, you can get both. And we're adding another $21,000 for 2021. So then the credit became up to $26,000 an employee and you can get PPP. So like all of our clients, who are restaurants, for example, or really any restaurant, they don't have a big client. Every restaurant, if they have a sit down area, for example, is eligible for the employee retention credit. It's a refund. It's literally you're getting back the money because the government came in and partially suspended or fully suspended a lot of these places saying, hey, you can't operate the way you once did. It's eminent domain issue, really. And it's just compensation for that. And a lot of people don't know about the program or they think they're ineligible. And we've seen a lot. We've completely shifted our focus to ERC because we've just seen so many misconceptions with the program where people are like, oh, but I made money during the pandemic. Like my first client that really motivated me to do ERC, they're a chain of bakeries in DC. They have over 100 employees, like they're huge. And they're like, we really pivoted. We did really well during COVID. We made too much money. Our accountant said, we don't qualify because we made money. And I was like, what are you talking about? You're a bakery in DC, so we looked in it and I was like, this is going to be over $1 million for you. You had capacity restrictions. And like, there are so many people only looking because there's two ways to qualify. You either have a reduction in gross receipts or a partial or full suspension of operations. So a lot of people think, oh, I didn't lose gross receipts, I'm not eligible. Meanwhile, they're entitled to like millions of dollars. And, like personally, I've already helped people get millions of dollars, which I'm very proud of. Obviously, I love to point out tax programs that can get people money. It's maybe a passion of mine. But yeah, if you guys know any business owners, that's a specialty area of ours. So you can always send them our way. It's not a very restrictive program, so think like a salon, they're automatically eligible. Also capacity restrictions, wherever people are being spaced apart and you can't have 100% capacity, they're eligible. Even law firms can be eligible. If you are litigators, you're not able to go into the courts, you're likely eligible. And then also, if they receive 2 rounds of PPP, they're going to get ERC because of the rules. You got to have a 20% reduction for PPP2 and a 25% reduction for PPP2 and a 20% reduction for ERC. So like so many people just don't know about this program. This is the one I'm really, really passionate about. So it's like life-changing.
So is that ERC credit, is that going to be based on your 2021 tax return, the ones that we just filed,
So it's actually based on your 2019 profit and losses if you're looking at gross or a reduction in gross receipts. Okay. So you'll look at 2020 and 2021 compared to the same quarter in 2019. Or if you have capacity restrictions, that's all irrelevant, and it's available for all of 2020, which is pretty small. It's up to $5,000 for the year per employee. And then 2021, it's Q1, 2, and 3. Each quarter is worth up to $7,000 an employee. They don't have it for Q4, but if you did start a business during the pandemic, there is money in Q4. There's just so many nuances. And we could be on a whole nother webinar if I got too into ERC.
That sounds very confusing. So is that something that I guess, if you were a business, say, well, for anybody business, that had potential distance restrictions, you said, because it's not limited to food companies, but anywhere, I guess, how do you know was it something that you would see on a tax return? How would you know if your tax return preparer did that or included that?
Well, you would get like big checks from the IRS,
Oh, okay. Like a big refund, you mean?
Yeah, really. For 2020, you would have really had to go back and amend because they changed the law in December 2020.
Okay.
2021, theoretically, CPA could have claimed it on the return. What we're seeing is no one really did. There's just too many rules and nuances in this program and like the ways to be eligible, because the IRS has set out all these different rules. Like you have to show that there was a more than nominal effect. And everyone's like, I don't know what that means, but more than 10% of your revenue basically comes from that stream. So if you're a restaurant saying, yeah, obviously more than 10% of my revenue comes from people coming in and sitting down in the restaurant, or you're a law firm and you have a huge litigation or even a moderate litigation branch, and they weren't able to litigate during the pandemic. That could qualify you, you know? And sorry to use the same examples. There's so many different ones. Like I'll think a little outside of the box of like some people, you know, I've gotten some clients just from people who go to conventions normally during the pandemic. And that's where they get a lot of their revenue, being like, hey, we sell water machines, but they can't sell them during the pandemic because there are no conventions to sell them at. For example, I'm talking about a specific client of mine, like they get ERC, you know, it's just, they don't realize just like, oh, because I wasn't able to exhibit, I get it because the government said we can't have big events, you know, like this program is so expansive. It's crazy. Yeah.
So, and then, so if somebody came in and then they are eligible for it, but didn't apply for it before, does that require an amending of a tax return or just it does?
Yeah, but it's not a big deal to amend it, you know, it's more where the work with ERC comes in is like the whole analysis, you know, like that's just kind of going back and amending a line on the return. It's just like we have like, there's like the separate memo and you have to do the legal analysis, make sure you're eligible and everything. So people shouldn't just like assume they're eligible and be like, oh yeah, you know, like you gotta go through the government orders and everything and have those like ready. So, you know, they are.
Okay. So that's something that if somebody thinks they might be eligible, they're not really sure, maybe they've already filed their tax return, but they can bring their tax return to you and have a discussion with you and
yeah,
see
and
if
our
they're
firm
eligible.
actually, yeah, we're actually doing the whole analysis for free because like we're so confident that everyone's messing up, you know, because you know, like I'll say, for example, I had one guy being like, no, I got 200 something thousand dollars. It was amazing, so great. I had a reduction in gross receipts that one quarter, so I only got it for one quarter. So he's so certain his CPA did it right, and I'm like, but if you get a reduction in gross receipts one quarter, there's a rule the IRS has laid out that you automatically get it in the next. The next quarter, he paid more wages. So that was another $1 million. And he was so confident, you know, but it's just these little rules. This program is way too niche. That's why, like, I would say do not do it yourself, ever. It's not something you do yourself because you will either leave money on the table or do it wrong and take too much money. And then the IRS is going to want it back. So.
Okay. And so if they were to say, you know, come to you, or then you would find this and find this money that they could save if they amend their return, and then you guys could also assist with the amending of the return.
Yeah.
Because I know, you know, typically lawyers don't like to prepare returns, but you have additional staff and accountants.
Not us. We don't do it as the lawyers. We have the CPAs and enrolled agents doing it. So we have a group of them that are only allowed to do ERC. So there's like 30 people that only do ERC now.
Okay.
Really big focus of the firm right now.
So definitely something to be thinking about because it sounds like there's a lot of money out there that people aren't accessing, mostly because they don't really understand the rules, it sounds like. So, okay. And are you finding, well, maybe it's too early, but are you finding that there's a lot of pushback or auditing of these ERC things? I mean, it sounds like with the PPP, they really relax some of the rules to make like the PPP forgiveness very easy for loans under a certain amount. You know, but have you found that there's been any pushback or concern about the ERC?
You know, it's just like any other return. There's a chance it could be, but that's why you don't do it yourself. You have like the whole memo with like the government orders and everything, and you're making sure you do it right. But I'd say if you had to put a percent on it, I'd say like less than 5%, but even way less than that probably. So it's just, you know, it's like taking a deduction for your rental expenses on your return. Like it might get audited, but also they are just, so many people are applying for this now that like people are starting to catch on that, like, you know, it's probably going to realistically be even lower. But that's why we have like this whole legal memo that's what the attorneys do, is we're like, yes, this is why you're eligible, these are the capacity restrictions, and here are the attached government orders, this is the applicable law, blah blah blah. And
And so Tina, when you said that you're doing this initial consultation without charge, then so somebody could come to you, bring their information, you would look at it without a fee, and then there would be a fee to amend the return or to write that legal memo. Then that would be specific too.
Yeah. So basically we look at their documents first and are like, yes, you are eligible. And we estimate you're going to be eligible for about this much. And then if they are eligible, at that point, we're like, here's an engagement letter. And then because it's more of a tax preparation thing, it's actually a fixed fee. So we're not charging hourly like normally either. So it's a little different. And then we don't charge them until they actually receive the refunds. Since it is COVID relief, we're doing it different than like traditionally how we do it,
Oh, that's nice.
Yeah, I mean, it's like, oh, you need help from like surviving the pandemic. Like it makes sense. We're not gonna take it. Anytime someone's like, oh, we charge up front, I'm like, shame.
Okay. And how long is it taking people to get that money back typically?
I'd say 4 to 8 months. It's picking up a little bit now. They're like picking up the pace now that tax season's over. But I'd say average 6 months.
Wow. So it's still a while then. It's not
Yeah,
like
you gotta
immediate.
paper file the amended 941. So that's the problem.
Oh, you have to paper file it. Okay.
Yeah, if we could e-file, it would be way faster, but we're just not there yet.
Boy, okay.
Yeah.
So one question is, are they still eligible if they receive the restaurant revitalization grant?
Yes.
Okay.
So that's why also restaurants are like, there's no way I'm eligible for another program. So
Right.
even if you got EIDL, both rounds of PPP, restaurant revitalization, it doesn't matter. You can still get this. And like
Wow.
this program, one thing that's really cool about with restaurants, it includes tips. So basically like they're giving a refund of the tips. It's total incentive to actually report your tips. Like so much public policy behind it. I'm not going to get into it, but they're getting a refund of those tips back. So people reporting their tips, it's crazy. Like this program is just blows my mind.
Wow. All right. Well, that's great to know. So, anybody who has not taken advantage of that, definitely sounds like there's a lot of money out there on the table that is being left on the table. And certainly coming and seeing you as for a free consultation, at least it gives somebody an idea of how much they might receive back, which is really nice. So Tina has put in her email address in the chat. Yeah, no, that sounds like that's sort of an extra. It's not a Maryland specific tax credit, but it is a credit that sounds like it could be very useful for not only restaurants, but many other businesses that may have had some restrictions during the pandemic. So
yeah, honestly, unless you're a fully remote company that was totally unimpacted by the pandemic, like you're likely eligible for at least some quarters. There's only been a handful of people I've ever had to say, hey, sorry, you're not eligible. Everyone else is like, yes, you are. Like this program it's just like PPP, like some people are locked out, but not very many. Like,
so certainly worthwhile then. So worthwhile to check it out. It sounds like even if you review somebody's information and there's nothing to be gained from that, then people really haven't paid for anything.
Yeah, no engagement letter or anything, just yeah.
Okay. We only have a minute or so left, but I guess there's a quick question about the restaurant tips. Were you saying that you would include restaurant tips as lost wages or?
Well, so it's just calculated. Basically, it's not like a lost wages thing. It's just how much money did you pay? It goes into that amount. So they're going to say, okay, you paid this much in wages. We're going to give that back. But they're also going to pull in that tip money. They're going to account for that as the wages paid and then refund those portions as well. So, the places that are like, oh, I haven't been reporting my tips, they're really trying to disincentivize that. So yeah, and it's crazy with restaurants because that's where they get most of their money, it's
right.
Yeah.
Very interesting. Okay. Wow. Sounds great. Wonderful. Well, thank you everyone for joining us today. I hope that you, I learned a lot certainly, and I hope you did as well. And again, we encourage everyone to be a volunteer. I see a lot of volunteer names on here, and certainly you are welcome to email me or let me know, and I'm happy to share the slides with you. And Tina is going to also send me a black and white version that can be easily printed out so that we're not spending it, which will be a lot easier to read, I think, in a printed out version as well. So without having to expend a lot of toner and color. So. All right, Tina. Well, thank you so much. This is really great. I learned a lot, and certainly, and I'm going to look into the education credit myself. Yeah, I'm sorry. So yes, again, if you are a volunteer and you're interested in the slides, let me know, and I'm happy to share them with you. And And if you're not already a volunteer, then I encourage you to join us so that you can have the slides. So thank you so much. Thanks, Tina.
Thank you. Thanks
Thanks.
everyone for joining.
Yeah, bye.